just about 8 o'clock in the morning right now. I've done all of my analysis for the morning. Basically, that's what I do when you're day trading. It's very, very important to understand what's setting up for the day, where you're sort of like the key support and resistance areas are, what could potentially cause you some trouble. There's also setups you look at, and also to obviously develop a bias for the day. I've done all of that now. I've got the morning coffee, which is very, very important, and now let's see if we can go make some money for the day. So we've potentially got quite an interesting day ahead of us. The market's gapped up above a resistance level, which was playing with a little bit last week. It's now holding above that level, which is quite good, but it has moved quite a bit since the open. What I'm sort of waiting for right now is a little bit of a pullback, because I don't like to chase moves ultimately, but it is very, very positive. I was expecting the market after some of the news last week from the Bank of England talking about their quantitative easing program, and obviously looking to ease monetary policy quite significantly. I knew that it was going to have an effect on the stock markets, not just in the UK but also in Europe too, and that's obviously what's happened. And as I said, now I'm expecting the market to move higher. It's coming up towards another resistance level. It's not quite there yet. It's about sort of 40-50 points away, but the markets do tend to gravitate towards these levels, and obviously it's our jobs as traders to try and take advantage of those moves, but not chase them. As I said, I'm waiting for the setup, for the right sort of a pullback for me to be able to get involved in that trade. It hasn't happened yet, but as I said, quite an exciting day all the same. So we'll just sit there and wait and watch, which is what we do. That's our jobs as day traders. We have to just sit here and wait for the markets to show us their hands, and if they give us an opportunity, then obviously we take advantage of them. If they don't, then unfortunately sometimes you just need to watch the market roar away without you involved. But as we say in the flying community, it's much better to be down here wishing you were up there than up there wishing you were down here. And it's the same for a trade. It's much better to be watching a trade wishing you were in the trade than being in a bad trade wishing that you were out of it. So let's be patient, let's be disciplined, and see what sets up throughout the rest of the day. So we've just got into a trade. It's basically the same trade that we were talking about earlier. And what I'm going to do is I'm just going to zoom into the charts for you for just a second, just so you can see exactly what sort of a trade it is that we are looking at here. So I don't know if you can see that there, but basically what we wait for with these trades, zoom out a little bit, it's just a little bit fuzzy, but what we try and do with these trades is that we look for the market to start trending in a position, in a direction, sorry. We then wait for the markets to pull back somewhat, which is exactly what's happened here. So the market's pulled back. We don't want just like a tiny small sort of pullback, which is the reason we didn't get involved in this trade over here, because the market hadn't really gone far enough, and then the pullback wasn't really in proportion to the rest of the move there. But anyway, so basically what we look for, if I turn this back around again, hello, can you see me? Zoom's all wrong. So we wait for the market to trend in a direction. We then wait for it to pull back somewhat, and then give us an opportunity to get involved in the trade in the direction of the trend at a bit of a discount. So obviously, as I said, we don't want to chase the markets. We don't want to, well, sometimes we want to buy highs. It really depends on the setup. But when you get a morning like this, Monday mornings, really you want to give the markets a little bit of room to be able to breathe, to sort of find its direction for the day. As I said, particularly after the weekends, it can be quite erratic in the morning. So that's what we've done. We've given it a good hour now. It's just about 4 minutes to 9 o'clock in the morning. And we're involved in this trade, obviously looking for it to then break out above the highs and potentially, I don't know if you can see here, let's put that there. Breaks out above the highs, we'll then be looking for it to come up towards, where is my cursor? Come up towards these highs right there. Okay, so if it can break out above that, come up to around the 104.81 type level. So that's about 30 points from where we are. And then I'll get better at turning this video camera around like that. Around 30 points away from where we are right now. And we've got a stop loss in there of just about 8 pips on the table. So just a little more. Yeah, it's about 8 points stop loss for a 30 point gain, and it's a very, very high probability setup. You know, usually we tend to make money on at least 60%, and more often than not, sort of 70-75% of these trades, they make us a decent return. So you've got a very, very good risk reward trade on your hands there, with a very high probability of success. So obviously we don't know whether this one will make money. It may not, it may go against us, but c'est la vie, that's the way the markets go. But I'll come back and report back in just a little while, as soon as this trade has either stopped me out or gone in the direction and made us some money for the morning, which would be very nice, because I've just got back. If you read any of our emails, just got back from Disney. So I spent a few weeks out there with the family, which was lovely. Very, very depressing to be back. But hopefully this will do something. This will go a little way to cheer me up. So let's see what happens there, and I'll speak to you in just a little bit. So I've just come out of that trade. It didn't actually go on to hit its target. It started to roll over. It gave basically 2 attempts at the high. Went to the high once, didn't manage to get above it. Then went towards the highs again, and again it stalled and then started to turn around. So I actually got out of the trade a little bit early. Well, quite a lot early actually, considering we were looking for sort of 30 points on the trade. I ended up getting 7 points profits. Because the market looked like it was going to turn over, but that's not a problem, because it's now looking as if it's going to pull back a little bit, consolidate a little bit, which isn't a problem at all, because I quite like getting involved in those trades as well once the market's, obviously, as I said, consolidated and really decided to pick up its direction again. They're also very, very good trades. So I'm still in the market, I'm still looking for the next trade, but at the moment it was just sort of better to take what we had off of the table and see what the markets do, because, you know, once you've got some profit on the table, particularly when you're day trading, the point is to come out profitable every day. And it's not going to happen every day, but that's very much your target. You know, you don't want to let money on the table turn into big losses. And I'm not saying that you take profits way too early. You wait to see what the markets do, and if they start to roll over, then you have a decision to make. And with me, I'm one of these people that like to be right a hell of a lot more than I'm wrong, and that's obviously what we teach our members in the day trading group as well. So basically, when you do have profits on the table, obviously you do have a target, and that's what we shoot for. But if the market's telling you something else, then you really have to react to that. And that's one of the beauties of day trading. You don't have to sit in some of these trades and sort of watch, you know, what could be a significant amount of profit turn against you and then turn into a loss and things like that. You're very nimble, you're very agile, and you're always waiting to be told by the markets what it is that you want to do. So, so at the moment, it's pulling back somewhat. I'd very much like to see it go sideways a little bit more. For, let's say, the next half an hour or so, maybe even an hour, and then break out above these highs. And if it then breaks out above these highs, then I can really see it going on to make significant highs for the day, and go on a significant rally. So we'll wait to see how that turns out, and yeah, we'll be back soon. Okay, so I've just come out of basically the exact same trade as we closed just now. So the market, what happened was the market did pull back. It pulled back to a support level, pulled back to basically the previous entry level. Obviously, that being the previous entry level, it also printed support there, which was fantastic. It then turned around, started to give us the entry trigger that we look for. Once it gave us that trigger, we got involved in the trade, and then finally managed to get out of it at the resistance level that we were talking around, or just a little bit before there, at 104.78, and obviously the resistance level was 104.80. And really, you know, it's quite amazing, and I do say this to our members all the time, and anybody that emails us about trading saying, you know, I'm just starting out, what's one of the things that, you know, the most important things that we should look at? And I say support and resistance, because you can literally build any system you want around support and resistance levels, because the markets gravitate towards these levels. You know, they trade with these levels, whether you're using them for exit, points, whether you're using them for entry opportunities, the markets do something with these levels. So if you can learn to identify support and resistance levels, if you can learn to, to trade key levels, then you're going to set yourself up for a long career and successful career trading the financial markets, whether that be a currency pair, whether that be a stock, whether that be a commodity, an index. All of the markets, they trade with these levels in one way or another. There's going to be a reaction to these levels, and if there's no reaction, that's fine. It won't give you a trade setup, all right? But identifying areas, high probabilities on the chart where it's more likely that you're going to make money than not, that's really the key to successful trading. But in terms of our day trading, that's pretty much it for me for the morning. So it's 10 to 10 now. I'll now go on to sort of answering emails from you lovely people, managing some of the Forex positions, looking at some of the swing positions, and things like that. But unless something really, really, beautiful sets up throughout the rest of the day, I won't. Typically, I tend not to monitor the markets as closely past 10 o'clock as I do before it. So sort of between 8 to 10 is when I'm really, really looking at the markets. And after then, I'll just have the screens on in the background anyway, and have the charts there, but it won't be something that I'm actively, day trading. If something, as I said, phenomenal turns up, we will trade it. Otherwise, we'll go on to doing other things. So I'll catch you in a little bit, but that's it for the day trading for the morning.